Hello guys, welcome to i-tutor Academy. In today's session, we will start with Unit 9, that is Financial Sector and Fiscal Sector Reforms. So objectives of this chapter are, after reading this unit, you should be able to review the major reforms introduced in the financial and fiscal sector during and after 1991. Also discuss the reforms in the banking and insurance sector and discuss tax reforms introduced in India in recent times. And structure of these units are, first of all, there is an introduction, banking sector reform 1991, reform in financial sector and reform in the insurance sector, tax reform 1991, fiscal sector reform, summary, keywords are there, and self-assessment questions also there. Okay, so let's start with the introduction part of this unit. So in Unit 5, you have studied the circular flow of income, output and employment and learned how various sectors of the economy interact with one another. Okay, you just verify our Unit 5 video. And in circular flow, the financial sector plays a pivotal role in channelizing savings and investment. The banking and insurance sector is an important constituent of the financial sector. You must have noted that even after so many decades of Indian independence, large chunk of the population is not covered by formal banking and insurance services. Due to the dearth of these services, the social security of the citizen is threatened and they have to be dependent on non-institutional sources of credit finance, which is exploitative. The financial sector is itself mired with problems like a non-performing asset, that is NPA, inefficiencies, lack of capital and many more. In this unit, we will examine the major banking sector reform introduced as part of new economic policy in 1991. We already discussed in last chapter, and then move to recent reform introduced in the financial sector, especially post 2010. Fiscal policy is related to taxation, expenditure and public debt. Tax is mainly of two types of direct and indirect. An efficient tax system is necessary for collecting tax revenue in the country. In Units 8, you have learned about economic reform of 1991, and during the process of liberalization, privatization and globalization, a series of measures were introduced in the fiscal sector in form of direct and indirect tax reform. In recent years, the economic policies of the country have taken a new direction and dimension whereby emphasis is placed on domestic manufacturing, bringing more investment both from the private and foreign sectors, reducing foreign dependence. Make in India and ease of doing business are the buzzword. To achieve these objectives, lot of reform have been introduced in the banking sector, insurance sector, labor market, direct and indirect taxes, and similarly in many other sectors. So in this unit, you will study major reform and policies undertaken in this sector. Banking sector reform 1991. In continuation to NEP and bring structural reform in the working of the economy, a series of measures were introduced in the financial sector, especially in the banking sector. The following section you will study about this financial sector, especially in the banking sector. In the following section you will study about these reforms. Okay, in 1991, the Government of India set up Narasimha Committee to examine all aspects relating to the structure, functioning, organization and procedures of the financial system to remodel these institutions for raising the overall efficiency. And the Narasimha Committee 1991. Narasimha Committee was set up in 1991 to analyze the falling efficiency of the Indian banking sector and then recommended certain reform to revive the banking sector. Major recommendation of the Narasimha Committee 1991 are: the committee felt that the present structure was too rigid and inflexible, so it proposed the deregulation of the interest rate structure and said that the interest rate should be determined by market force. And the next is re-examination of direct credit program and to include small and marginal farmers, tiny industrial sector and weaker sections. Third one is reduction of statutory liquidity ratio SLR to 25% over a period of 5 years from 38.5% in 1991. Further, the cash reserve ratio to be reduced in phased manner from the existing rate of 15%. And fourth one is establishment of 4-tier hierarchy for the banking sector, which should be followed. Okay, you just go through this point by point. And the fifth is introduction of prudential norms and regulations. There is definition of non-performing asset also there. You just go through from your study material. And asset restriction fund, that is ARF, to be established for the recovery of loans. This fund would take a portion of a bad and doubtful debt of the bank at a discount. And next is end to the duality of control, and RBI should be the primary agency for the regulation of the banking system. Next one is to provide autonomy to the banks. The chief executive of the bank should be appointed based on professionalism and integrity and not on political consideration. And next one is bank can assess the capital market and issue of fresh capital to the public through the capital market. The Banking Companies, that is Acquisition and Transfer of Undertaking Act, was amended so that bank can raise a capital through public issue, but to the condition that the holding of central government would not fall below 51% of paid up capital. Setting up of new private sector bank, if they conform to the requirement of minimum startup capital and other requirements. Further, there should be any differential treatment between public and private sector banks. And opening of foreign bank to open offices in India either as branches or as subsidiaries. And Narasimhan Committee 2 there, 1998. This committee was given the mandate to review the progress of banking sector reform and design a program to further strengthen the physical structure, technological upgradation, human resource development, capital adequacy, norms and banks. The major recommendations are here. You just go through your material one by one. And next one is reforms in financial sector. The government of India from time to time have been making certain reforms to strengthen and stabilize the financial sector. First one is Financial Stability and Development Council, that is FSDC. The government of India in 2010 created an apex body, that is non-statutory, to promote financial sector development and strengthen the mechanism for maintaining financial stability. Merger of Forward Market Commission, that is FMC, with the Securities and Exchange Board of India, SEBI. As you must be familiar with the forward trading in the context of shares, in which buyers and sellers agree to trade a financial asset at a future date at a specific price. Similarly, forward contract are agreement in the commodity market concerning the future delivery of a commodity at a pre-negotiated price. Insolvency and Bankruptcy Code 2016. Before the Insolvency and Bankruptcy Code 2016, there were several laws and procedures, mostly overlapping and adjudicating forms, that deal with insolvency and financial failure of individual and companies in India. And to promote entrepreneurship and availability of credit and balance the interest of all stakeholders under the new code, the National Company Law Tribunal, that is NCLT, will now adjudicate insolvency resolution for companies, and the Debt Recovery Tribunal will adjudicate insolvency resolution for individuals. Establishment of the Insolvency and Bankruptcy Board of India will oversee the insolvency proceedings in the country and regulation of all entities registered under it. And to speed up the implementation of this code, Government of India established the Tribunal, National Company Law, that is NCLT, and National Company Appellate Tribunal, that is NCLAT, and Insolvency and Bankruptcy Board of India, IBBI, in 2016. And Insolvency and Bankruptcy Code, the Amendment Ordinance 2021. The Insolvency and Bankruptcy Code Ordinance 2021 was promulgated in 2021. The ordinance targeted the corporate person classified as MSMEs to provide them with an efficient alternative insolvency resolution framework and to provide a cost-effective, faster and value maximizing outcome for all the stakeholders. This is to be done in such a manner which is least disruptive and preserved jobs. That is the source from Insolvency and Bankruptcy Code Amendment Ordinance 2021. Next is Banking Regulation Amendment Ordinance 2017. And you just go through your Ignou material also, because it is, you just study this just for your knowledge, and based on this you can frame your answer also. Okay. And the Banking Regulation Amendment Act 2020. To find a solution to the deteriorating condition of cooperative bank in the country, the government amended the Banking Regulation Act 1949 and to promulgate Banking Regulation Amendment Bill 2020. The major objective is to bring cooperative bank under the supervision of RBI. And this is about today's session. And next section of reform in the insurance sector we will discuss on next video. If you have any doubt on this, you just contact our contact number also. You can comment it on our comment box also. And for more videos, you just do like, share and subscribe our channel also. Thank you so much.
i-tutor ES presents Ignou MBA, complete syllabus coverage classes and individual semester base, subject coverage program for MBA students online and flexible sessions. For more details, contact 62382 17885.